Hello everyone, welcome to this educational video on the fundamental concept of supply and demand in Forex trading. Supply and demand are fundamental economic principles that play a crucial role in the Forex market. In simple terms, supply refers to the amount of a particular currency available in the market, while demand represents the amount of that currency that buyers are willing to purchase at a given price. In Forex trading, the exchange rate between two currencies is determined by the balance between supply and demand. When a demand for a currency increases, its price rises, and when the supply exceeds demand, the price decreases. Supply and demand in the Forex market are influenced by a wide range of factors, including economic indicators such as interest rates, inflation rates, and GDP growth. Political events and geopolitical events can also have a significant impact on supply and demand dynamics, such as elections, trade agreements, and natural disasters. To identify potential trading opportunities, Forex traders analyze market conditions to determine where supply and demand levels are likely to be the strongest. They use tools such as support and resistance levels, price patterns, and chart analysis to identify these levels and make informed trading decisions. For example, if a trader sees that a currency is in a high demand, they might decide to buy that currency, anticipating that the price will rise or will go up. Conversely, if they see that supply is high and demand is low, they might decide to sell that currency, anticipating that the price will decrease. In conclusion, understanding the fundamental principles of supply and demand is essential for success in Forex trading. By analyzing market conditions and identifying areas of supply and demand, traders can make informed decisions that can potentially lead to profitable trades. I hope this video will give you a better understanding of the role of supply and demand in Forex trading. And by the way, if you haven't subscribed, please go ahead and subscribe to the channel. And make sure you like the video and share it with your friends. Also, be aware of the scammers in the comment section, because I will never ask you to text me or call me on WhatsApp or ask you to, send me money so that I can invest it for you. I don't do that, all right? So be aware of that. Also, I have an ebook that will teach you everything that has to do with smart money trading. That ebook simply sells about $149 and more, but I'm selling it for $39.99, and the link is going to be in the description. Anyways, without wasting much of your time, let's get into the charts. First, we're going to start with illustrations, and then I'm going to go ahead and go to the live chart and show you guys exactly what we're talking about here. So be patient with me and make sure you watch this entire video, because you're going to be learning so much from this episode. So pay attention. Write down your notes and make sure you practice everything you learned today. All right? So, as we all know, the market always evolves three things. All right? Let's say here, the market is ranging. Okay? And then this is what we see afterwards. All right? And then after that, the price will come back and then reverse again. All right. So this area of the price, we call this ranging market, all right? Or we call this equilibrium, all right? When this is happening, this means everything is fair. Buyers and sellers are both happy. Why? Because buyers are buying from here and sellers are selling from here. Again, buyers here and then sellers here. They keep continuously doing this until the price breaks out of the structure, all right? So everything right here is basically fair. We can see that the price is just, in equilibrium. So buyers and sellers are both happy. And the market, what it does is balance, and then price start, demand comes in, takes out this structure here and creates an imbalance. So anytime price goes outside of this range, it creates an imbalance, all right? So when it creates that imbalance, that means there's more demand than supply. Now, buyers are willing to buy that currency at a given price. So what happens is, instead of buying from here or buying from here, what makes sense to them is waiting for a discounted price. So they wait the price to come back all the way where demand is originated from. Okay? When the price comes back over here, they start buying again. All right? On the other hand, sellers basically do the same thing. All right? They also do the same thing, whereas they play the same game as the buyers do. So over here, everything is equal. Market was balanced. It created imbalance. It came all the way back to rebalance the market, and then buyers enter the market again to continue to the upside. All right. So now let me delete this again and show you guys how it looks like on a market structure based. All right. Let's say the price was going up, pulled back, and then created a break of structure. All right. And then price will probably come back over here and then continue to the upside. So here we have a price that's creating low, higher high, higher low, higher high, higher low, higher high, and then back to demand zone again. So this is our break of structure. So we're going to go ahead and mark this as a break of structure. All right. So once we have this break of structure, everything was balanced from here to here, and then from here to there. Everything was looking great. Buyers and sellers, just like in the Iranian market, they were both happy, and everything was equilibrium. Everything was selling at a fair price. But then demand came into the market, and then it took out the previous supply and created more demand for that currency. So buyers like me and you and the banks and the institutions and those with a bunch of money, what they do is they're not going to buy it from here or from here or from here. In trading, we call this chasing the trend. So you don't ever want to buy it after a break of a structure. You always have to wait for the price to come back to a level of, a demand zone or a level of supply zone in order to execute a trade again. So most of the buyers who are intelligent, remember, when you trade in this market, you're trading against some of the smartest people in the world. They are here to take your money, and they're here to make money. And remember, 90% of the traders lose 90% of the time. So you might want to open your eyes and trade with the big boys. This is very important. So play with them instead of playing against them. All right. So if you buy it from here, the market is going to reverse on you, take you out, and then come all the way over here. Now the big boys who started buying from here before the break of this structure, they will take this trade again and target this structure. All right. So now sometimes what happens is the market is going to create this little pullback here. All right. Sometimes. And sometimes this might be the reverse way the price is going to reverse. Okay. But most of the time, price comes back to all the way over here, which is the extreme demand zone before the break of this structure. And that demand zone sometimes has an imbalance. Okay. Remember, everything was balanced here, here, here. So if you look at it, it looks like a triangle where buyers and sellers are both happy. But then when demand came into the market, it created that demand and that imbalance. But then market has to be rebalanced again so that those who did not buy it from here can buy it again. All right. I hope that makes sense with this concept. Okay. Again, there are two types of entry. Let's say the price was creating this. Okay. Some buyers, when the price comes back to this area of demand, they will buy it right after. They're not going to wait for any confirmation. They're not going to wait for anything, but they're going to buy it right away, put their stop loss over here, and then take profit 1 here, and then take profit 2 over here. Okay? And then some traders, what they're going to do is they're going to wait for a confirmation. So let's say the 1 hour time frame is creating higher highs, higher lows, breaking this structure here, and then creating this high here. Okay? So there's a demand that took out this supply here, because remember, there was sellers over here that was selling the market to the downside. But once this move took out this previous structure, the demand now is present in the market. So most buyers now are waiting for this price to come back over here and buy it again. So some of them, what they're going to do is they're going to wait for the price to create some type of confirmation. So when the price comes back over here, Okay, it creates what do you call a confirmation on the lower time frame, and then they wait for the change of character, and then they wait for the lower time frame demand zone, and they're gonna buy again. All right, but some buyers, what they're gonna do is they're gonna wait for the price to come back over here and enter the market right away. This is called an aggressive trader. And then those who wait for the change of character on the lower time frame, if the 1 hour is doing all this, when the price comes back over here on the 15-minute time frame, what they're waiting for, the safe traders, is they're waiting for a confirmation that tells them the price is ready to reverse. So they wait for that change of character. When they wait for that change of character, which is they wait for this price to create lower highs, lower lows. Okay, lower highs, lower lows before it hits this demand zone here. So when it comes over here, they wait for that break of structure or change of character, and then they go ahead and mark their lower time frames demand zone, and then they execute their trade over here, putting their stop loss down below here. So this is more safety than those who buy it right away. All right. So for me, usually, sometimes if I see a rejection somewhere here, I might end up buying it right after. But if I don't see a lot of rejection going on, then I wait for a confirmation like this one over here, and then I target this area here on the 1 hour time frame if I bought it from the 15-minute time frame. On the other hand, for the seller market, all right, let me show you guys how it looks like on a seller market. So what we learned right now is a demand price entry, and now we're gonna go ahead and learn how supply looks like. All right. Let's say the price was consolidating right here. All right. As the price was consolidating, it created this move to the downside. All right. So now what was going on here is everybody that was buying and selling from here, they were both happy. Why? Because the price was very fair, equilibrium, everything was equal. So we call this an equilibrium price. Buyers and sellers are both happy and they're buying and selling equally. Sellers are selling from here, and then buyers are entering from here, buying again, targeting the high. So there is no imbalance. Everything is balanced over here. All right. Remember, the price moves in three moves, which is balance, imbalance, and then rebalance, which is the price has to go back to where the supply was, and then continue to the downside. All right. So somewhere here, before the break of this structure, before the break of this structure here, somewhere here is where supply was originated. Okay, everything was balanced. Now sellers, they want to take it further. Basically means they want to sell this currency. Let's say over here GBP USD. Let's say if pound is strong and USD is weak, buyers are willing to buy this currency because their economy is good, they trust this pair, and it makes more sense to them to buy more. But if pound is weak and USD is strong, now they will sell it because they don't trust the economy of the pound or UK. All right, the UK economy is not that great. So whereas the USD is stronger, so now they are willing to sell it. All right, at a given price. So here, everything was equal. Buyers and sellers were both happy. And then supply came into the market and they started dumping the price to the downside. But those who are intelligent, like I said, the big boys or the big banks or the big money, they're not going to start selling from here, or they're not going to start selling from here. What they do is they're going to wait for the price to give them that discount so that they can make money and sell it from a premium or a discounted price. Okay? So they wait for the price to come back to all the way extreme to an extreme supply zone, and now they're going to execute targeting the low structure over here. All right. So there are two types of traders on a seller market in the meantime. All right. Let's say this is what's going on again. All right. Price goes back to a supply zone. Some traders, what they do is once a price creates this break of a structure and creates that imbalance, remember everything was balanced over here. Price created an imbalance, and now price has to go back to rebalance the price. So some traders, when the price comes back to this level of supply zone, the supply zone might be somewhere here sometimes, or sometimes it might be this extreme area. Okay, So the price comes back over here, it can only do two things. Either it breaks to the upside, okay? Either it breaks to the upside, all right? Either price breaks to the upside and creates that change of character and continue to the upside, or price reverses from here and continue to the downside. So some traders who are very aggressive, they start selling it from here. All right, let's say this is the 1 hour time frame, and then when they go to the 15-minute time frame or the 5-minute time frame, if when price comes back to this level of supply, they sell it right after. All right, remember, trade with the big boys. Do not go against them, because if you do, you're gonna get trapped. If you sell it from here or if you sell it from here, you're gonna get trapped, and the price is gonna reverse on you, take you out, go all the way back to where the original supply was, and continue dropping to the downside. So always be patient and wait for the price to come back to a level of supply or a level of demand. So some traders, like I said, who are aggressive, they start selling it from here once the price gets to this area. And then traders who are safe, they don't trade like that. What they do is, on the lower time frame, when the price comes back to this level, they wait for some type of change of character, and then they start selling again. All right. So let's say on the 1 hour time frame, this is what's going on. All right. But on the 15-minute time frame, price is creating a structure that's like higher highs, higher lows. Okay. And once it gets to over here, price is going to take out the last higher low led to the higher high and create change of character. So the safe traders, what they do is they wait for the price to go back to the lower time frame supply zone, and they're going to execute their trade over here, putting their stop loss over here and targeting this previous low before the price came back to this level. There's nothing very hard over here. Everything is very easy. Remember, the market only does three things: balance, imbalance, rebalance. Okay? Everything is balanced over here. The price created imbalance, and now the price is going to go back to rebalance whatever that was going on over here, and then sellers enter the market and sell again. Very easy, okay? So make sure you practice this strategy on your chart. So now we're going to go to the real chart and practice how it looks like on a live market. Let me go ahead and delete all this stuff. Now we're going to go to the right live market and check out how we can spot this on the live market. All right. So here, I'm going to start from here, and then we're going to go down to demand zones. Okay. So let's say the price was creating higher highs, higher lows, higher highs, higher lows, higher highs. Once the price broke this structure, what happened? Okay. Once the price broke that structure, what happened is, you can see it right away. Everything was balanced. Everything was looking great. But the price created this imbalance here. Everything was balanced. The price created this imbalance. And now it has to go back to rebalance the price here. Okay. So now, after the break of this structure, the big players, they're not going to buy it from here. Okay. Or they're not going to buy it from here. They're going to wait for the price to come back to a discounted zone like this area here. Okay. So this wick that you can see, the body and the low of this the body and the low of this candle, there is an imbalance going on. If you look at the body and the wick, there's enough imbalance going on. So what happens is, the price came back all the way over here. Okay. Once the price came back all the way over here, it rebalanced, and then buyers started buying it again at a discounted price. But for those who chasing the trend and who bought it from here, they are not in the market anymore, because the price came back on them, took them out, and then came back all the way to a discounted price, and then buyers are buying again. All right, good. Here we have another break of structure. But once we have this break of structure, the price continued to the downside. So now what happens is, price created this change of character. Change of character basically means a rollover or a change in trend. All right. So everything was balanced over here. Okay. As you can see, buyers and sellers are both happy. And then sellers came into the market and they start selling the price. So once they start selling the price, it created an imbalance. So everything was balanced, imbalance. Now the price has to go back to rebalance what was left here. Okay. So now the big players, they're going to put their they're going to set their supply area there, because there's enough orders that needs to be executed right there. Why? Because when you look at the wick here, okay, it's not mitigated all the way, or it's not filled all the way. So the body and the high of the wick is empty. So nothing going over here. So now the price goes back all the way, and then sellers are started selling again from here. All right. So now there are two types of sellers. Some sellers are aggressive. So as soon as the price touches over this area, they start selling it right after. And some sellers, what they do is they wait for that change of character. They go all the way down to the lower time frame, and then they wait for that change of character. Once they get that change of character, they execute their trade and then continue to the downside. All right. Again, we have the price breaking this structure here. Okay. When the price broke this structure, everything was balanced. Everything was looking great. Buyers and sellers are both happy right here. All right. But then the price created this imbalance, which now they don't want to buy it from here. They don't want to sell it here. They don't want to sell it here. And they don't want to sell it here. Now what they do is they have to wait for the price to give them a discounted price so that they can make their profit. Remember, you are trading against some of the smartest people in the world who have a lot of money, billions and billions of dollars. There are almost 7 to 8 trillion of dollars, over volume every single day in the Forex market. All right. So make sure you are very cautious. You're very calculated, and you know what you're doing when you're taking trades. I've seen a lot of people who are sending me a message in the Telegram and telling me, hey, I took a trade and I don't even know what's going on. How can you take a trade and not know what's going on? You have to know what you're taking and why you're taking it. If you don't know why you're taking a trade, please do not gamble your money. Always be patient, or else you're going to learn this the hard way when you lose a lot of money, and that's when your senses is going to go back to normal, and then that's already too late. You don't want to go through that. I'm talking to you through experience, so make sure you listen to your guts and make sure you know what you're doing before you execute any trade. So here you can see the price was balanced. It created this break of a structure, breaking this structure right here. So once it did, what happened after that is now sellers, they want to wait for the price to come back to this area. So if you look at this zone, there is enough imbalance going on here. All right. The body of this week and the high of this week, there is some type of area that needs to be filled. So now they started selling here again. Some wait for a change of character on the lower time frame, and some execute their trade right after the hit of this supply zone here and continue trading until the price hits over here, because this is their last previous low. And sometimes they target this area here. Okay. First take profit, and then second take profit over here. So it might take a long time, but hey, this is how they do it. All right. So now again, let's see, the price started continuing to the downside, breaking where again? Guess where? Right here. Okay. The price broke this structure here again. Okay. From here to here, everything was good. Everything was buying and selling. Balance buyers started from here. They bought until over here, and then sellers started entering from here, and they start selling until right here. But they continued price to the downside. So now what happens is the smart traders, they're not going to start selling the price here because this is too late. And they're not going to start selling from here because this trend is already not a discounted price. So they wait for that discounted price because they're already there to make money, not to lose money. So it makes more sense to them, instead of buying it, selling it from here when the price already moved, they're going to start selling it from a premium level. All right. So here you can see there is some type of area that needs to be filled. Okay. There's a little bit of imbalance going on between this candle and this candle, a little bit of imbalance. So now the price went all the way back up to fill that imbalance and continue to the downside. All right. Again, you can see the price breaking this structure here. All right. When the price broke this structure, what happened after that is they wait for the price to go back all the way up and then start selling it from this imbalance zone here. All right. Which is a supply zone. All right. So some traders, when the price comes back over here on the lower time frame, they execute right away, and then some wait for a change of character. All right. Now again, price broke this structure. All right. when the price broke this structure, it just continued to the upside. And instead of price slowing down, this supply here did not hold. So instead, price created what you call a flip model of supply and demand. Price continued to the upside. So now when the price continues to the upside, what happens after that is price is going to come back to fill this area here. Okay, some traders call this a breaker, some call it flip supply and demand, some call it, an order block that was supposed to be, it's not supposed to hold the trade, but it kind of like the price went up. So now the price is going to go back to mitigate this area and continue to the upside, because this order block or this supply zone did not hold. Instead of price reversing from here, price started breaking to the upside. So now after that, what happens is price is going to reverse from here again. All right. I hope it makes sense. Very easy, very simple. So the price continues doing this over and over and over and over again. So right here, we have another break of a structure. Okay. We have another break of a structure. So when we get this break of a structure, what happens after that is instead of price coming back all the way over here, it reversed from this level here. And the reason why is because if you go a little bit lower time frame, price is creating here higher low, higher high, higher low, higher high. So this was the last higher low before the break of this structure here. So now instead of price coming back all the way over here, but eventually on the long time frame, on the long run, the price is going to come back over here and reverse later on. But right now, the price is not ready to return from here. So therefore, instead, it started reversing from this area of demand zone there. All right. Again, price created another break of a structure right there. All right. Price broke this structure and then created this imbalance here. So now the price has to go back to rebalance and then reverse from this zone here. All right. The body of this candle and the low of this wick needs to be rebalanced. So those who started buying from here, now they have more orders to fill, and those who missed out can buy it again. All right. So the price continues to the upside. Buy. Again, we have another break of a structure here. Okay. Again, we have another break of a structure right there. Once we get this break of a structure, the price came back all the way over here again and then started buying right there. Continue. Again, price broke this structure, right? Price broke this structure here. When it did, it reversed from here. Again, it broke this structure here. Once it broke this structure there, what happened is price started reversing from this imbalance area there, because there's a lot of imbalance going on between this high of the candle and this low of the candle. So price came back all the way down here and then reversed from there. Or what you can say is this breaker did not hold the price. So you can see there's a breaker that caused the supply here, which is supposed to hold the price before, when the price dropped from here. When the price dropped from here, just like I showed you previously, price dropped from here. When it went back over here, instead of price reversing from here, price broke to the upside. So what happens is price respects this area of flip supply and demand here, and then buyers started buying again. Okay, right there, another break of a structure, and now they started buying over here again, entering the market. So the price continues doing this over and over and over and over and over again. Again, there's enough area that needs to be filled. This wick here needs to be filled again. Now price buys again, continues to the upside, and this is how we see it. Okay, again, we have another break of a structure. Price continues to the upside, and now it came back all the way over here to fill this, the low here, the body here, and the low of this candle here. The wick here, there's enough imbalance that needs to be mitigated. So the price came back all the way and it started reversing again. Maybe the price will reverse from here or break this and then create this breaker, respect this breaker here, and then come back and continue to the upside, targeting this zone. So guys, this is very easy, not very complicated. The price, let me just rephrase it again. Price there's three things: balance, imbalance, rebalance. Remember, price only creates balance, imbalance, and then rebalance, okay? And then continue, all right? That's all price does, all right? Always be cautious. Always make sure you trade, according to your strategy. Do not be emotional, because you can never get rid of your emotions, but you can control your emotions. Don't be like a person where, when they see the market is moving, they just want to take a trade. Don't be that person, okay? Pick one pair and one session. Trade that one pair and that session until you know what's going on in the markets, all right? Until you become profitable, keep doing that. And always look out for the news, because sometimes while you're trying to take a trade, there is a high impact news that comes out, and then that will mess you up and you're going to end up losing money. So always be cautious, always be careful, and do the right thing. Until next time, your brother Jamal, peace and love.